Driving business performance in today's complex and volatile environment presents unique challenges for senior management in general and for corporate finance in particular. And because it is a rapidly evolving environment, there is also an increasing demand for finance leaders to lead business strategy in real time, a shift toward performance insight, and higher value placed on an integrated business planning approach. Of course, as you look to make changes in better managing the performance of your business, there is great value and opportunity in understanding the benefits of enterprise performance management, or EPM. EPM can be described as the ability of an organization to effectively manage the execution of its business strategy through improved management decision-making. It is the integration of various methods that translate your plans into results. In other words, it is execution, or the framework for managing your strategy. And since strategy is of paramount importance, it is, after all, senior management's #1 responsibility. Naturally, you're concerned with the products or service lines that you offer or that you decide not to offer, and concerned with the markets and the types of customers that you serve. But the main strength of EPM is in achieving success through the adjustment and execution of business strategies by aiding managers to sense earlier and to respond more quickly to uncertainty. And it does this by pushing the accountability for results to the lowest possible organization levels.
Joining us from the Hackett Group is Sherri Liao, North American practice leader for the Enterprise Performance Management and Business Intelligence Executive Advisory Program. Thanks for joining us this month, Sherri.
Thanks for having me, Mike. Pleasure to be here.
Since it's part of your job title, Sherri, let me start with a baseline question. What do you mean by, and how does Hackett define, enterprise performance management?
That's a great question. We actually get that quite a bit in terms of just better understanding what that acronym means. There's so many acronyms out there around enterprise performance management, whether you mean EPM or BPM, business performance management, they're all pretty much the same. Generally at Hackett, we see this as a decision-making competency. So really at the end of the day, it's how do you make a better decision based on the information that you have at hand? What's the framework that you use? What kind of information do you need to have at your fingertips to make those decisions? A lot of those functions, a lot of those competencies come from FP&A. So I think there tends to be a lot in the market that says, oh, well, EPM is FP&A. And at Hackett, yes, absolutely, FP&A plays into that a great deal, but it's much more than just a function. It's really a competency around decision making.
Well, it seems as if EPM is being discussed everywhere these days. Is this something that our viewers, as corporate financial executives, need to know about? Or is it just another flavor of the month?
Well, it's actually not another flavor of the month. We've done a number of studies every year, our Hackett Key Issue studies, that continue to show that investment in planning and performance management remains top of mind in finance. In fact, this year ended up being the #1 area that finance continues to make investments in. And a lot of that is because at the end of the day, with this day and age, organizations are striving to become more agile. And in order to become more agile, they're needing to be better armed with decisions, with information, and that's really what planning and performance management is about.
Well, you certainly know our viewers' organization, Sherri, and increasingly these days, they're focused on margin improvements and they're pursuing revenue growth. How can EPM assist them in achieving innovation-based growth?
Well, performance management very much is around understanding line of sight of information to help you make those kinds of decisions, right? And so if you're able to better articulate or better understand the different facets of your financials, of how that drives into things like customer and product profitability, what does profitability mean, how are you managing margin, those are all the different facets that performance management addresses. And how do you get to that? Much of that is around the kind of information that you have at your fingertips. Much of that is around how you structure your data to get at that answer and understanding of the view, and as well as the processes involved and how efficient or effective you're able to get at that information on your regular business review cycles and your forecasting processes.
Well, on the one hand, companies certainly want enterprise growth. But on the other hand, they want to drive more value from their resources. Is it possible to achieve both simultaneously, Sherri? Or are those mutually exclusive objectives?
Well, we've actually seen our top performer group in EPM achieve both. So it's not that they're getting more resources to do more enterprise performance management or better decision making. They're not doing that by hiring more people. So our recent performance studies and EPM have actually indicated that top performers are doing more with less. So they're able to achieve better competency decision making, better efficiency in forecasting and performance reporting by actually having fewer resources. We see that in their percentage cost spend in this area, as well as the number of FTE spend. So the whole notion of you need more people to be better in this competency is actually quite a fallacy.
And I suppose finance, or FP&A, as you call it, is viewed in many organizations as a critical source of EPM expertise, isn't it?
It is, and I think largely that's because finance has always had that traditional kind of view of being accounted for, driving projects, driving initiatives, having the procedural rigor to do so. So naturally, finance kind of comes to the forefront in driving those roles. Certainly, there are other organizations in certain industries where you have partner organizations in sales and operations that do that, but by and large, across our clients, we still see finance driving that for the most part.
Okay, let's make sure I understand you, Sherri. Do you expect finance to generate effective insight for decision making or to improve information management and delivery?
Well, we hope both, Mike. Otherwise, the value of why finance is there really, comes into question. In fact, that's actually a huge area that we're seeing an uptick in interest on with our clients, where they're coming to the table to say, our business wants more from us. How else can we deliver more value to them? And a lot of times it's getting outside of those traditional roles of being a scorekeeper of the numbers, a performance administrator of where things are landing. It's really coming to the table with saying, here's some proactive analysis I've done. This is where the business is landing if we don't take into account these risks and opportunities, right? And so taking the time to actually do that, having the time to do that is important ever now for finance.
Well, let's be honest, Sherri. Everyone likes to discover newfound capacity in their organization. What are these so-called top performers doing with all those savings?
It's a great question. So a lot of our top performers are actually reinvesting their savings. So they're making an effort to better arm their organizations with better insights, with more enterprise-related insights, as opposed to just some of the siloed-related insights that they might be doing for their segment or for a region. They're really driving improvements at how can we really think about the bigger picture, have that perspective in mind. And we're seeing that being a true differentiator in terms of the kinds of decisions that they're making, the kinds of insights they're being able to offer up. And that's what their operational business partners want.
It sounds as if you can't be successful at EPM without a strong technology platform. To what extent is that platform typically unique to the finance group? Or is it possible for the technology to serve enterprise-wide functions?
So from a technology perspective, we certainly see a lot of our top performers embracing latest trends in technology. A lot of them do have the purpose-built systems to help them do planning and forecasting, enterprise consolidations and of the like. It's not necessarily a prerequisite, I would say, to have an enterprise tool in enabling those processes, but it certainly is an enabler to speeding up the benefits of that. At Hackett, we like to say, it always goes back to the foundation, and so if you don't have the functional kind of pieces around your process in shape, the governance that's laid down with that, as well as clarity on roles and responsibilities, there's no amount of automation that's going to improve or give you performance management out of a box.
Let me follow up, Sherri. How has the cloud affected that use of technology?
Well, that's a great question because we're seeing huge impacts of cloud in EPM. Namely in the space of driving more options to be made available to our clients in terms of speed to implementation for purpose-built systems. It's offering up new ways to really serve up information where whether it's large amounts of big data or it's really predictive analytics. There's different engines, different vendors out there now that offer those kinds of options that, frankly, not a lot of people are taking advantage of now, but it is a trend to be on the lookout for the next 2-3 years. We're certainly seeing more of our clients mix things related to cloud-based solutions and on-premise solutions to give them that flexibility to drive a better adoption at times, as well as speed the desired solutions that their businesses would like to have at their fingertips, and not wait the 18 months to deploy something. So it's certainly changed the game, as well as re-energized a lot of the innovation in the space. Opened up new doors for other vendors that previously were not playing in the space at all. And that's exciting as a practitioner to see. You always want to see more variety and what that creates in terms of competition and diversity.
In a similar vein, what impact has the cloud had on the types of data that are available to organizations?
Well, now more than ever, there is a lot more data out there, a lot more big data out there, unstructured data out there, and so it just increases what's available for finance to tap into. And really not just finance, but also other enterprise functions. A lot of this really has opened the doors to some extent as well for finance to arm themselves with better ways to do predictive analytics. But a lot of that also comes with the responsibility of understanding what's the impact of those analytics. Is that something that the business desires or that they should be aware of? And so really the whole aspect around cloud and big data, it's really accelerated, I believe, a lot of what finance is hoping to do with delivering better value for the business.
Thanks, Sherri. We'll return to your commentary in a minute.
In a challenging economic and regulatory environment, the CFO, along with the other executives, is expected to focus on business strategy and growth. Of course, the strategic agenda for many organizations is permeated by a need for corporate finance to play a broader role beyond its own functional walls in improving core processes such as planning, forecasting, and reporting. And as organizations ramp up to address these issues, it is inevitable that corporate finance will be viewed as a critical source of EPM expertise. After all, the Wall Street Journal recently reported that, quote, CFOs have a bigger say than ever before in determining where and how companies place their IT bets, end quote. So while CFOs have a leading role to play in transforming organizations, many are still struggling to identify best practices for implementing EPM solutions that can help make the most of their growing influence. According to a recent Hackett Group survey, this year's main drivers of the EPM agenda are: 1, a strategic focus on delivering growth and margin outside of traditional markets; 2, the need to manage performance under structurally higher levels of volatility in business conditions.
Of course, EPM sounds complex, and we do live in a complex world. But some of our viewers want me to ask you, Sherri, does it make sense sometimes to go back to basics?
Well, this whole notion of back to basics is one that we are seeing as a theme over and over again with our clients. And if there's anything that FP&A absolutely needs to be good at, is really that business of turning the crank, having that procedural rigor there, and frankly, not spending a ton of time on that, and having that be really focused in a way where it's efficiently operating, that they don't really need to touch on that. With that being said, that requires a lot of going back to understanding, hey, is our profile of how we do planning today, does that fit our business? Surprisingly, a number of businesses don't go back to understand the purpose for why I plan. Is that really something that's understood across my organization? Do we have agreement on that, right, in terms of what the purpose of a forecast is? Is it to see where the business is landing? Or is it to see, it's a health check against the targets I issued at the beginning of my budget season? So sometimes making those assumptions creates really bad behaviors in terms of how you can effectively execute on those processes. So going back to basics in our mind really is to understand with clarity what those mean and fitting each of those planning events so that the time horizon, the frequency of how you forecast, and really the outer months of how long you need to look out, that fits with your business model, right? And so obviously businesses change over time. You have acquisitions, divestitures, perhaps you've been acquired, and if you don't take the time to fine-tune what your planning events need to look like to inform your business that may be very different, you already have that disconnect. And so you got to be good at what your stated function is, obviously. Take some time to do that, and then you can move on to do all the other things that the businesses are asking you to do.
Okay, let me follow up, Sherri. What are the latest trends or hot buttons in this area? What projects are companies and people interested in tackling now?
So we actually see a number of new moves in this space, which is always exciting as a practitioner. We're seeing a lot of our clients embrace the whole aspect around data visualization. So it's really changing the game, actually, in terms of how you talk about your results. Migrating away from the traditional, hard copy books, things being presented in traditional financial statement points of view, but rather presenting the results through some type of tool that allows for visualization of those results. So whether it's heat maps or bubble charts or actually different types of graphs that actually being used live in those operating review sessions to make those points and drill into a live time analysis, that's really exciting to see. And it's also changing the type of skills and talent that's being required to support that kind of line of questioning and analysis in those meetings. We're also seeing a lot of investments in really driving at better strategy around master data management. I think there's been a lot of back to basics in this area where folks are realizing we need to talk the same language when it comes to performance management. My definition of what I see as margin is very different from another organization, across the pond. And so there almost is this movement to say, in order to better lever the tools that we have, the processes that we have, we need to come to an agreement of what's that common language we need to speak. And so focus on master data management, establishing better data and process governance, that's become of heightened importance now.
So to what extent is FP&A involved in, or should finance be involved in, providing analytics for other business domains like marketing and operations?
So that's a great question, Mike. We're actually seeing finance really move beyond finance, the subject of finance, which is exciting. I think they're able to do that now more than ever because of the tools that are out there, as well as the openness to embracing beyond what they can just provide as a function. And I think a lot of that is because they're being put out there, or they're actually receiving demands from their operational business partners to do more. And so as a result of that, they're looking at, well, how do I present a better equation of what's going on, say, with customer profitability, if I can actually get at a better view and understanding of perhaps there was one, customer marketing initiative out there to acquire a segment of customers. What did that actually cost me? And should that have been actually brought in as a part of total customer profitability? What was the effectiveness of a marketing campaign on that? What was the return on that? Did I account for those costs in acquiring that customer segment? So it really changes the whole conversation of customer profitability if you're able to see more of that cost being allocated and how that's accounted for.
Yes, companies do want their finance staffs to provide more analytics and more forecasting. Well, Sherri, I'm curious. How can they be expected to provide support for business decision-making while they're also coping with new and increased compliance requirements?
Well, certainly, Mike, some of our clients are facing those particular pressures of increased regulatory and compliance, specifically in certain industries like financial services, especially some parts of utilities as well. With a lot of our clients in those areas, what they're going back to is the basics on really getting procedural rigor down, foundations down, and how do they generate a plan, a forecast on a timely basis? How do they speed up performance reporting so that it's not taking the 80% of the time that they have, but rather the 20% of the time that they have, so they can flip the equation and spend the majority of their time on actually generating the value, doing the insights, doing the analysis that the business expects them to do. So in order to kind of get to that point, then you also need to put the house in order, so to say.
On the one hand, finance professionals are known for being thoughtful and for being respectful of rules. On the other hand, they're not generally known for being flexible and creative, are they? Can they really increase an organization's transformation capability?
Well, I think finance's role has definitely changed in this manner over time. Finance has, for a long time, been a leader in this space. And I think because of the initiatives they've taken on various projects and transformation, they're also looked to as, leading the charge in some extent to drive change in a manner that will be beneficial for not just finance, but for the total organization. Finance is usually held accountable for the communications of these broader transformations, and sometimes holding a seat at the steering committees and the decision making around what they should pursue from an initiative standpoint. So certainly it's something that to think about from from a stakeholder standpoint, you have a lot of influence in that, in driving the business strategy and how to realize that.
I've got to be honest with you, Sherri. A lot of times I have trouble understanding the difference between the phrases that I hear. You've already defined the first part of your job title, EPM. So remind me, what exactly does business intelligence mean in this context?
Yes, so business intelligence is what we define at Hackett as really understanding how the supply of information that's made out there is being met with the demand of information that's being asked. And there's a lot of other ways to technically explain business intelligence with the tools that are out there and things of that nature. But at Hackett, we really see this as it's a supply and demand equation. So the information that I'm providing, is it what people want? Is it what they need to really get at better insights? And then in terms of how it's being provided, is there data quality? Is there consistency in that information? Is it complete? How reliant can I trust that information? And so it's really the kind of understanding of how those two aspects come together to drive a better business intelligence.
And speaking of talent, Sherri, from your perspective, what skill sets are going to be most helpful for the finance organization to be an effective business partner?
So we have actually done a number of studies in this area related to finance organization and talent. And surprisingly, a lot of the softer skills have come up the ranks in terms of being areas of importance to recruit on, train for, things like communication, good project management, being able to advise the business. Those are all areas that you traditionally would not think of FP&A as opposed to traditional sense of, really just understanding numbers and, the rules and regulations, particularly for how you put together plans and forecasts. So it's a lot of those softer skills that are coming more to the forefront now. And surprisingly, those are the harder ones to recruit, of course. So a lot of organizations are taking time to train up their talent internally, give them the opportunities to drive at education in those areas, and at times do rotational programs as well so that they can improve upon their business insight in local operations.
One of the takeaways from the financial crisis was, besides volatility, the need for agility. To what extent are companies still focusing on responding to, as well as forecasting, potential future shocks?
Well, certainly, Mike, nobody wants to go back to what happened a few years ago, back in 2008. And in fact, a lot of our clients that we work with today still have that very much top of mind, just, what they did in that cycle, what they didn't wish to have happen, and unfortunately did happen. So to get in front of that now, we're seeing a lot more of our clients put in procedural rigor around scenario planning, running, essentially processes that help them better understand the what-ifs of the worst-case scenario, the best-case scenario, and building those in, actually, as a part of their forecast. So giving a range of outcomes as opposed to just a point outcome. We're also seeing them doing more modeling of how do they best account for different risks that might be coming up in their industry. So they're accounting for additional external factors at play. We didn't previously see a lot of that external influence, kind of event-based understanding of triggers happening, and now I think honestly because of the shocks that happened, and frankly not wanting to go back to that, they're trying to be proactive in building in those aspects of things into their planning event profiles.
A few years ago, Sherri, one of your colleagues told me, as part of the new normal, that companies are expecting to triple the level of globalization in their business functions. But I'm curious, was that just pie in the sky, or is that still a realistic estimate?
Well, the aspect of globalization is an interesting one in FP&A, because I think everyone would tell you that standardization and driving towards a means of really acting as one enterprise is always an ultimate common goal. Especially, though, for FP&A, this is challenging because it's also the dichotomy of knowing your local markets, your regions, your segments, and the diversity of that, how that adds up. And so it's that balancing act, I think, that sometimes FP&A has to address at times that can be very challenging and difficult. We certainly see that a lot in how organizations are challenging how potentially they should execute FP&A service delivery now. So should they maintain those FP&A teams to be reporting up to their segments, or should they have more of a centralized ownership going up to corporate? So all of those are really factors that we're seeing from a trends perspective emerge now, more of those kinds of assessments to better understand how they should really be serving up the business.
Now, I know you run a membership program at Hackett, Sherri. What topics are your members expressing interest in these days? And what do they see going forward?
So Hackett runs a pretty comprehensive advisory offering. And with this membership offering, it's really a blend of our latest research, our benchmarking capabilities, as well as on-demand consulting. And we find that within this community, there's a lot of our members that are able to provide us very relevant, timely feedback on what we should be caring about, what we should be investing further time in to help them. Some of the latest topics that have really come up are really around how do they better lever their investments in service delivery. So really the whole notion around, should I be thinking about really centralizing more of my resources at FP&A if I have to do more with less? Certainly that's on the table. The whole notion of centers of excellence. Can I really build truly a center of excellence that can deliver planning, forecasting, performance reporting capabilities all in one? Is that possible? Another topic that really has become top of mind is this whole aspect around, where should I be spending my time from a governance standpoint? How do I best instill enterprise process ownership across the board, and how we establish procedural rigor in forecasting and planning? How do I make that happen with teeth in the game so that we don't have little pockets within the organization that are doing their own thing in this area? Those are two of the hotter topics at the moment, and certainly there's always questions around use of technology in the space. That's actually been very exciting to see because we've seen new vendors, new product offerings come up at a greater rate now within the last 2-3 years than we ever have been, and it's great. You always want to see product innovation in this area to help our constituents.
A business receives the Hackett Book of Numbers. They see how typical companies compare to top-performing world-class enterprises across various efficiency and effectiveness metrics. And they compare these to any similar metrics they can generate internally. Now, if you don't mind my asking you, Sherri, in the ideal world, what do you have them do next?
So in an ideal world, obviously, there's this natural tendency to measure yourself up. Where do I stand against all of these metrics? I'm more in the top of the pack, or perhaps do I have some work to do and I'm more in the middle or the bottom quartile? In those cases, what we do with our clients and our members is we help them understand what are some of those levers that will help them get to that next level of performance. And not everyone wants to be top performer or world class in that respect. Sometimes you have to make that decision, that kind of reasoning of things based on your industry, your state of where the business is heading. Maybe timing isn't right to do that, but certainly pick a point for where you want to drive improvement to. And from there, what we generally help our clients with is to better understand what are some of those levers you need to pull at. So is it better procedural rigor on your process? What do best practices look like for forecasting and planning? Aspects around target setting. How would I best apply that in my situation? We also help them better understand what does good look like. So sometimes that is actually a best practice education training session for their staff, for their teams, to better understand, breaking outside of my organization, here's what other people have done in this space with reporting, how they've structured role-based strategy in information sharing. So really it's the sharing of that knowledge and then helping them realize what that plan to improvement might look like from a roadmap perspective, laying out that plan of action and helping them along at their pace.
Well, Sherri, you're right. Everyone would like to adopt best practices, but some financial executives have told us that they learn the most from common mistakes. To what extent are there traps for the unwary that you've come across?
Well, I think there is a bit of the notion that if we do more and keep on doing more of something, especially in terms of analytics or more reporting, we're going to get there eventually. And I think what has shown from our studies is that you need to drive at both efficiency and effectiveness at the same point, hand in hand. Our studies have actually shown there's a pretty significant bottom line improvement in net margin for those that really invest and take the time to work out their performance management capabilities. So there is a bottom line impact for that if folks are looking for a business case around why they should be investing the time. And really, at the end of the day, it's about being smarter about the work you do. So doing more of something that, yes, it's a good thing for analytics, but you got to be smarter about how you serve that up. not everyone has all the time in the world to read those reams and reams of reports or find that answer or run that query for you. It's much more of a, I've got a short finite period of time to analyze results. Help me get there so I have more time to make some of the decision making on actions to take.
Well, you certainly covered a lot of ground for us this month, Sherri. If our viewers could take one thought away from this presentation, what would you like that to be?
Well, Mike, I'll give you two parting thoughts. The first is that absolutely there are many different levers to consider when it comes to driving improvement in performance management. It's not just about looking the process of things. It's not just about looking at how you use your technology. It's the whole facet of how that looks like in totality from a holistic standpoint. How are you pushing on your use of information? Where are you placing the services of FP&A in your organization? What does governance look like? And so certainly at Hackett we have a point of view of how to drive at that holistic assessment and really understanding at the end of the day, it's the combination of all those levers that help you get there. And so sometimes that takes some time to map out what that journey looks like through a blueprint or a roadmap, and that's incredibly important because as you're driving transformation in this space, our experience has shown, especially from our client testimonials, that this doesn't happen overnight. And so my biggest advice would be to pick on some of those areas that you believe in your organization are the pain points, the root causes for driving some of the inconsistencies that are happening in performance management today, and then put together what that roadmap might look like so you have a plan of action to go forward with.
Okay, you said two. So why don't you give me a second takeaway?
So the second one here really is around that challenge, that notion that finance really needs to move beyond the numbers. And this is really a continuing theme that we're hearing from our clients where finance is being asked, I need you to do more. I need you to act as my advisor. I need you to give me more than just where the numbers are landing. And so that's where we're also seeing the importance of finance to lead the charge in understanding how to drive at things like enterprise analytics, how to serve up, the different end-to-end answers of an equation on what better decision can I make for product profitability, accounting for everything from campaigns used to drive at those product innovations, all the way to acquiring customers that would actually be in line to purchase that product. And so really it's helping finance to become more armed to be that better business partner. And so continue to go down that path. Finance has a much better future in terms of serving up the business as a valued partner.
The Hackett Group's Sherri Liao, thanks for bringing us up to date.
Thank you very much, Mike. It's my pleasure.